The British pound is under pressure, slipping to around 135, a level not seen since February. Investors are nervous, seeking safety as global uncertainty rises. The pound is set to lose about 0.17% against the dollar this week, a sign of growing unease. This isn't just about the UK, it's about the dollar's strength dominating global markets. Interestingly, the pound has gained slightly against the euro, showing the story isn't one-sided. The pound's weakness is most pronounced against the dollar, reflecting a global search for stability. Daily exchange rate changes act as a report card for the UK economy, and right now, the marks aren't good. Recent gains have been wiped out, and investors are reassessing the UK's economic health. Many now see holding pounds as riskier than before. This sets the stage for a period of uncertainty for the British currency. The pound's journey is shaped by both domestic challenges and global forces. The financial landscape is shifting and the pound is feeling the strain. Investors are weighing risks and rewards, and caution is winning out. The pound's performance is a reflection of broader economic anxieties. The UK's economic outlook is being questioned. The pound's value is a barometer for investor confidence. The slide back to earlier levels signals lost momentum. The pound's fate is tied to both local and international developments. For now, uncertainty rules the day. The pound's struggle is a symptom of deeper economic concerns. Investors are watching closely, ready to react to new developments. The stage is set for more volatility ahead. The pound's weakness is largely due to the US dollar's overwhelming strength. The dollar is the world's safe haven currency. When uncertainty rises, investors flock to it. This isn't just about the pound being weak, it's about the dollar being exceptionally strong. Think of it as a seesaw. As the dollar rises, other currencies fall. The US economy, despite its own issues, is seen as a pillar of stability. Deep, liquid financial markets make the dollar the go-to choice in turbulent times. Investors are selling pounds to buy dollars, pushing the pound lower. The more uncertain the world, the stronger the dollar becomes. This cycle has played out many times in financial history. Even if the UK economy were strong, the pound would still struggle against a surging dollar. The dollar's dominance is overshadowing other currencies' stories. Global events are driving this trend, not just domestic UK issues. The pound's fate is tied to global investor sentiment. The dollar's pull is a powerful force in today's markets. The world's interconnectedness means currencies move together. The pound is caught in the dollar's gravitational pull. A fragile ceasefire in the Middle East is adding to global uncertainty. Markets dislike instability, and the risk of renewed conflict makes investors nervous. The war in Iran has already sent shockwaves through global markets, especially in oil and shipping. Investors are seeking the safety of the dollar, viewing the pound as riskier. The UK's close ties to global trade and energy make it vulnerable to Middle East disruptions. The ceasefire's uncertainty casts a shadow over the pound's value. Until peace seems secure, caution will dominate investor decisions. Geopolitical events like this directly impact currency values. A ceasefire agreement thousands of miles away can weaken the pound. The market is constantly pricing in risk, and right now, the risk is high. The pound's vulnerability is heightened by global tensions. The dollar's dominance is fueled by these geopolitical worries. Investors are watching and waiting, and the pound is feeling the pressure. The link between politics and finance is clear. The pound's fate is tied to events far beyond the UK's borders. Domestic troubles are adding to the pound's woes. New surveys show UK businesses facing record cost increases, the biggest jump in 28 years. Manufacturers' pessimism is at its highest since the early pandemic days. Companies are struggling to absorb soaring costs for materials and energy. Many plan to pass these costs on to consumers, signaling higher prices ahead. The CBI survey shows the largest expected price jump since 1975. Inflation is the fire on the horizon, fueled by global and domestic pressures. Higher shipping fees, energy, and raw materials are squeezing businesses. companies are warning of tough times ahead for the whole country. These pressures are a major reason the pound is under strain. The fallout from global events is hitting the UK economy hard. Businesses are on the front line, feeling the pain first. The warning signs are clear. Inflation is coming. Rising business costs are fueling inflation across the UK. Input price inflation, what companies pay for materials and energy, is at record highs. This is the first step in a chain reaction that ends with higher prices for everyone. The S&P Global Survey shows input prices at their highest since the double-digit inflation of 2022. Global supply chain issues and energy costs are driving this surge. Experts warn of second-round effects, higher wages leading to even higher prices. Inflation is now broad-based, hitting food, shipping, and essentials. Rising costs are eroding families' purchasing power. Businesses are struggling to plan for the future. The inflation threat is complex and widespread. It's not just about energy anymore. Food and shipping costs are rising too. The cycle of rising prices and wages is hard to break. Inflation is damaging confidence and stability. The UK faces a tough battle to keep prices under control. For ordinary people, inflation means a real squeeze on household budgets. Groceries, fuel, and heating are all getting more expensive. If incomes don't keep up, living standards fall. Businesses face higher costs and tough choices: raise prices or risk losing customers. Small businesses are especially vulnerable. They lack the cushion to absorb rising costs. If companies raise prices too much, demand could drop, leading to closures and job losses. The ripple effects of inflation can slow economic growth or trigger recession. Business pessimism is rising, reflecting deep anxiety about the future. Companies are worried about survival and the wider economy. The toxic mix of higher costs and reduced spending power is a major threat. The UK faces a challenging road ahead. The squeeze is real for both consumers and businesses. Economic growth is at risk. Inflation is the central challenge for the UK right now. With inflation rising, the Bank of England faces tough choices. Its main job is to keep inflation near 2%, often by raising interest rates. Higher rates make borrowing more expensive, slowing spending and cooling inflation. Recent data has markets betting on a rate hike soon. Probability jumped from 50% to 75% for June. Investors believe the bank can't ignore the inflation threat any longer, but raising rates is risky. It can also slow economic growth. The bank must balance fighting inflation with avoiding recession. It's a delicate act with high stakes for everyone. The Monetary Policy Committee faces intense pressure to act. A rate hike would signal the bank's commitment to controlling inflation. But the decision isn't straightforward. The bank is walking a tightrope between inflation and growth. The next move will shape the UK's economic future. Despite expectations, the Bank of England's path isn't clear. Some experts urge caution, warning that the economy is fragile. Raising rates too soon could choke off recovery. Economist Sanjay Raja believes the bank will wait for more evidence before acting. Policymakers want to see if wage increases and second-round effects emerge. Much of the inflation is driven by global factors beyond the bank's control. Raising UK rates won't fix global supply chain issues. Acting too aggressively could hurt the domestic economy. The uncertainty makes planning difficult for businesses and households. The bank must weigh the risks of acting too late or too soon. If inflation becomes entrenched, it's hard to reverse. If rates rise prematurely, growth could stall. The next few policy meetings will be crucial. The UK government's finances set the backdrop for all this uncertainty. The latest ONS report shows the budget deficit at a 6-year low. Some good news. A smaller deficit means less borrowing and slightly better fiscal health. Years of heavy borrowing are easing, giving the government more flexibility. But March's borrowing was higher than expected, signaling ongoing pressure. The government still borrows large sums each month, adding to national debt. High debt levels make the UK vulnerable to shifts in investor confidence. If the economy weakens or rates rise, Debt costs go up. This limits the government's ability to respond to new crises. Investors watch public finances closely when deciding to buy or sell the pound. Fiscal health is another layer of complexity in the UK's outlook. The state of public finances influences currency confidence. The economic puzzle is far from solved.